Many of you have heard of tax gain harvesting, but you don't actually know how it works. Now, some of you are like, what is this? Some crazy tax thing that they do in that Ozark Netflix show? No, this is real life stuff for clients that want to minimize their tax bill. Now, I've never met anyone that wants to maximize their tax bill, but I want to make sure you don't pay more than you need to. So let's have some fun. So I have a client that came to me. Now this client came to me and they're going, I don't know what I should do. You have too many videos. Should I do Roth conversions? Should I do tax gain harvesting? Should I do tax loss harvesting? Should I have broccoli for dinner? I don't even know what I should do. And I will tell that client, well, it depends on your situation. Let's have a deep conversation about your goals, what you're looking for most in life. But let me at least explain this zero tax thing because it's pretty cool. And they go, okay. So to this particular client, they do not have an RMD issue. Some of you are like, hey, what'd you just call me? RMD? No. RMD is required minimum distribution. For most of you, it's 75 years old where you're going to be forced to take out money that you might not even need. That's only applicable to your 401ks, your IRAs, accounts like that are pre-tax, tax deferred. Some of you have a Roth IRA. This, what I'm going to tell you right now today, does not apply to that. Some of you have a cash, not a cash. Some of you have cash. Okay, so English is my second language. Just kidding. But actually, funny story. Won't give you the whole thing. But my brother, his English teacher, thought English was his second language when it was his first. Hilarious. So I am going to walk you through how to pay 0% in taxes legally by doing all of the right strategies that most people don't know that was actually mentioned in a comment on a recent YouTube video that I will be linking into the description, but also showing you guys right here on the screen. This comes from Mr. E. I'm going to read his comment, and then I'm going to tell you how this applies to you. So Mr. E here, to summarize, he goes, I recently realized $94,000 of capital gains are tax-free. We retired at 49. We have cash. We have a brokerage. We have pension. We've got Roth. Coincidentally, we have $400,000 in unrealized gains in Apple in a brokerage account. My plan is to sell $94,000 for the next few years. Don't pay squat in taxes. Roll the unspent proceeds into VOO. That's a type of cow. Just kidding. That's just an ETF. Then our pension kicks in at 55 to cover most of our expenses. We can withdraw 2.5%, and that's going to fund our retirement for 50 years and die with more money than we have. So here's someone who's going, I want to do this tax gain harvesting thing once you mentioned it. So I'm going to give it to you guys. So what does this mean? Let's assume that you guys bought Apple stock for $10,000. Awesome. Then it grew. Now it's worth $100,000. And let's assume you're retired and you have a brokerage account. Well, some of you are like, hey, I kind of just put it up in my head that if it's not in a 401k and it's not in an IRA and it's not in a Roth IRA, but it's in a brokerage account, also called a taxable account, also called a joint account, they're all called the same thing, a non-retirement account, I'm going to have to pay capital gains. And I don't know what it's going to be, 15%, 20%, but I think I'm going to have to pay taxes on something. Like there's no way this government wouldn't let that happen, you know? And I said, no, you can pay 0%. And they're like, what? You're the best advisor ever. And I said, it's not me being nice. It's the rules. So this is called your long-term capital gains brackets. What this means is if this person bought Apple stock for $10,000 and it grew to $100,000, that's $90,000 of gains. They could sell that stock and pay 0% taxes up to $94,050 if they marry filing jointly. You're like, whoa. Can you give that to me in English, please? So what that means is you bought Apple stock for $10,000, went up like crazy, then you sold it for $100,000. $90,000 of that is 0% taxes. Now, let's assume you bought it for $10,000, but now it's worth $110,000. You're like, whoa. That's a different example. What do you mean? I'll help you out. $90,000, okay? Now, $90,000 was the gains before. You bought it for 10, now it's worth 100. $90,000 of gains. Now you bought it for 10, but now I'm going to say it's worth $110,000. Whoa. Just went up by 10,000. So now there's 100,000 of gains. Guess what happens? The first 94,050, 0% taxes. The remaining, that's right, the remaining 5,950 taxed at 15%. So when you don't have income in retirement because you're retired and you want to optimize your situation, $94,050, you could sell that Apple stock position and pay 0% taxes. But wait, there's more. Sounds like an infomercial. Not only that, you get to take a standard deduction every single year, or you can itemize. The standard deduction is $29,200. So really you have $29,200 plus $94,000. OMG, you can pretty much, I mean, not pretty much. Now, yes, I'm going to say pretty much. Here's why. Some of you go, well, that's $94,000 plus, 29,000, let's call it 30,000. That's a big deal. I mean, that's like $124,000, like tax-free. It is. But most people, like the person that mentioned the comment, he said he has a pension. He said that when someone has a pension, that's income that's coming in. That's taxable income. So he said he was going to sell $94,000 worth of stock. He should not do that. He is messing up, because if he has a pension that has $50,000, but he's trying to do this strategy right here, guys, how much could he possibly sell to pay 0% in taxes? Well, $50,000 is coming in the door through a pension. 0% is only up to $94,050 plus the standard deduction. So let's call it, this is $124,000 minus the $50,000. That's only $74,000 that he can actually pay 0% taxes. Now, some people go, well, I'm only going to pay up to the 0%. You shouldn't do that. 15% is still a good rate. It's still lower than ordinary income brackets up here. But the premise of tax gain harvesting is you saying, I've invested really well in a brokerage account, a taxable account. It's not a Roth IRA. It's not a 401k. It's nothing like that. I want to, because I retire early, create my own income. And if you have a superhero account, that's called a brokerage account. I just made up my name. It's a superhero because it allows you to take income before 59 and a half and bridge that gap. Just like when you're in London, mind the gap, bridge the gap. Most people don't retire early because they're worried about bridging that gap. Now, there are other things like the 72T rule and rule of 55, which I have other videos on. But to keep it simple for today, this brokerage account, this is the power of doing this. So what this person should be asking themselves is, should I do this where you do tax gain harvesting, or should they do Roth conversions? Because Roth conversions, if they have a healthy pre-tax balance, which I think they might based on their comment, they retired at 49, they have a lot of money in an IRA, they might make more money by not doing this, doing a Roth conversion instead, because you want to do one or the other. A Roth conversion increases your income. Tax gain harvesting and selling a stock increases your income. It might increase it. So you could have income of $100,000 with a 0% tax bill, because you could take the standard deduction and you could sell Apple stock. So guys, this is just overview on true long-term capital gains, on tax gain harvesting. You have to hold that Apple stock for at least a year, but this is a sample to understand, does this even make sense? So this important number sheet, this is in the Academy, just like everything else. Go check it out. A lot of things in here are important. How much income, meaning if you're single, you make over $161,000, you can't do a Roth. Married, finally, jointly, over $240,000, can't do a Roth. At what age do you get the catch-up? How much can you put into a SEP, a simple defined benefit plan? All of the important numbers for your financial strategy, they're all in here. So if you want Medicare premium knowledge, the Medicare brackets, when your Social Security is going to be collected, this is where I live with a lot of my clients. So hopefully this video is helpful. See you guys next time.